Hello, friends. This is Raj Sassi from Raj Option Trading. Today is October 12, 2021. Let's take a look at top stocks to sell put options. Many folks are attracted to selling put options because it's a good way of generating consistent monthly income. And also, many of you got a good sizable portfolio and you want to basically leverage the buying power that you have so that we can play with the house's money or the brokerage house's money. So with that, let's look at top stocks to sell put options. I typically love to sell put options on the growth stocks, which are pulled down pretty heavily, and they're at a fair price now. And let's look at, this is a way to generate monthly income so that we can keep selling some of these. Don't sell too much so that we can, earn a nice monthly income. And let's look at the strike selection. What strike do we select? And also let's look at how to spot these ideal candidates. So with that, let's jump in and get started. So what is put option, you might ask? Put option is really a way to make money when the underlying stock increases in price or stays the same or decreases slightly. There are multiple ways you can make money. The probability of making money is higher in this selling put option strategy. That's why it attracts many folks to really, generate a passive income by selling put options month after month after month. So that's one way people are attracted to. And also, seller of the put option has an obligation to buy the stock at the strike price if the stock reaches that price. So typically, when you sell put options, you got to have a bullish outlook on the stock itself. So that way, you want the stock to go higher. You're selling a put option at a lower strike price. And I like to go after these growth stocks which are at a bargain price. So that way I know these stocks are going to go higher. So that way I can benefit on selling put option. And these have unlimited or a unlimited loss potential, maximum equating to strike price minus all the way stock can go down to zero. That's why there is theoretically risk is unlimited, but it's really your strike price minus the premium you received, and maximum reward is limited to premium received. So that's why when you sell put option, don't have put option as only your strategy. Combine with the other strategies, so that way you want a nice reward, nice growth. That's where you buy some of the stocks or buy call option. At the same time, you want to generate some monthly income. That's where you sell some of these put options. So that's why don't just have put option as your strategy, because that will limit your profit potential, because your maximum reward is limited to premium received. But I know many people having a big portfolio, but in the meantime they generate a monthly income by having their portfolio as a collateral. And you can sell put option when volatility is high or implied volatility is high. So that way, that's when you get a bigger premium. And make sure the probability of touch is around 30%, meaning the stock reaching your strike price has a probability of 30%, and 70% of the time stock may not reach your strike price. That's the ideal way to select the strike price, around probability of touch around 30, or delta around say 20, 15 to 30. Then make sure identify a clear support area. Make sure you identify a nice support area below the stock price, so that way the probability of stock reaching that support area is pretty low. You can go just below the support area and sell put option there. And make sure you go 45 to 50 days out, so that way you don't expose yourself to too much time interval, or a time risk, as we call it. But sometimes I know folks who love to sell put options on their favorite stock, like Apple, Microsoft, do 6 months out, 1 year out to get bigger chunk of the money. If you're comfortable, you can do that, but understand there is some, high risk involved with the, selling longer term put options. But if you're comfortable to sell, maybe on one or two stocks, it may be okay. But there is always risk, or tail risk, as we call it. Stock might tank. You'll be holding the bag. That's why Ideally 45 to 50, unless you know the stock very well, like say Apple or Tesla, you are comfortable, you can sell a little higher, but understand there is some time risk there. Passage of time is your friend, or we call it theta decay. Every time, every day passes by, your probability of making money is more. You keep making more money, but when the stock price is below your strike price, that's when passage of time is your enemy there. So with that, let's look through here and look at a quick picture here. So when you're selling put options, think about your favorite stock. It's at $40 right now. So when you sell put options, you want to go couple dollars below the current price. So in this case, we got a stock at $40. I'm selling the put option at $30. Because I'm selling the put option, taking some risk, I'm collecting $2 premium here. So that makes it $200 because totally you're selling put for 100 stocks. That's why you're collecting $200 here. As long as the stock stays above 30, which is your strike price, you'll keep your $200 money with you. But if the stock goes below 28 because you collected $2, 30 minus 2, 28, that's your break-even point. The moment it goes below the break-even point, you'll start incurring the loss. So this is where we're talking about unlimited loss. In this scenario, your loss is $2,800. You collected $2, strike price 30, so $2,800 is your max loss. That's why you want to make sure stock stays above 30, that's your strike price, or above 28 to break even. This is why it's very important to select the stocks right. So that way, stock is a growth stock, is going to go higher. Right now, there is some bad news, maybe earnings miss, maybe some bad news. That's why stock dropped. That's the time to really sell the put options underneath and go far out, so that way you can make some good money there. So with that, let's look at a few stocks here to sell put options. The way I selected these stocks is it should be high IV percentile. As you look through here, we got IV percentile, we got 100, 47, 56, all high IV percentile. And also RSI is low. I want to make sure stock is down right now. The RSI below, here in this case, I think I'm below 30 here. As long as RSI is low, that tells you all these growth stocks are sold off right now. Look here, nice sales growth, nice gross margin, and many cases nice net margin. These are the nice growth stocks. So that's why you could take advantage of this huge pullback in these stocks here and high IV percentile and sell some put option and go from there. And I would recommend you can even buy the stock at this price. Look here, great stocks like PAGS, Chug, Melee, and so on and so forth. You can also buy the stock outright. Only thing I say is don't buy the call option here. I know many of you folks, I might have told you to buy some call option in the PAGS. I would not buy call option PAGS right now. See, IV percentile is 100, but instead buy PAGS stock outright here. That's a better bet. When the IV percentile is higher, you have to be an option seller, not a buyer. But you could buy the stock here. So buying stock is okay. You don't need to worry about implied volatility to buy stock. So with that, look at these great stocks here. PAGS, you could make some good money selling some put option. Can stock go down a little bit? Yes, it can, but I think it's a good price here. And then you got Chug, Melee, and so on and so forth. All these stocks here, great growth stocks here. Many of them have got nice net margin, and many of the stocks have got low debt to equity. If you want to be conservative, look at lower debt to equity ratio. The ones that are not in red here, those could be candidates for you conservative folks, so that way you don't take too much risk. A lot of great stocks here. INSEE, Crown's Castle, Melee. You could sell some put spreads underneath the stock price here. Akamai, one of my favorite stock. Skyworks, Logitech, which is off late. You could sell some put option under for these stocks here and take it from there. So we got, I think we might have one more. Okay, that's pretty much. As you look through here, as usual, I've selected all the stocks with a low RSI and high IV percentile. Basically, this row here, so that we can make some money. So now what we'll do is we'll look at one or two stocks and look at Thinkorswim just to make sure you get the idea right, and look at the chart to really identify some of these candidates. So let's first look at probably PAGS, and I will probably look at one more in this list here. Let's see here. Insight could be other one we can look at, and we can also look at one more, which is say let's look at AMAD, or Zebra is a good one. Let's look at Zebra also. So with that, let's go into Thinkorswim here for from TD Ameritrade. I will go here, look at first. Let's look at PAGS. So as you look through here, ouch, look what's going on here. PAGS is down big time. And what we'll do is right now you can see a good support level. So what I will do is go a little longer. Look at maybe 5 years or 4 years is good enough, and do a weekly here. So that will give us a little nice picture here. So as you look through here, stock is up and down type stock with PAGS, as you can see here. And as you look through here, we got some nice support level around say 25 or so. You could take that, or you could even go lower at 15. You may not make too much money around 15. I would stay around maybe somewhere here around 20 range here. And look here, no need to look at the stock chart. Only thing I would say is look at the IV percentile 72. That's pretty high. That's when you got to be selling some put options and willing to buy the stock if it falls down. I think it's a good one to buy also. So with that, let's go into option chain here and see what we can do with PAGS here. So PAGS, as you can look through here, right now it's pre-market. That's why all these numbers got messed up here. Don't worry about that. So when you sell put options, you would go 38 days out here. And as you look through here, let's clear this up here. Look here, we got probability of touching here. Probability of touching around 35% is good enough. You could still make some money here. If the stock reaches 25, you might end up buying. You could sell some put option here, and you could make 65 cents, as you can see here. If the stock comes to say 25, you would buy stock. Otherwise, you'll keep $65 and go from there. This is one way to pay, one way to play here. If the stock stays about 24 by 19th November, you get to keep $65. If it goes below, you'll start incurring some loss. So this is a good way. Right now stock is at 32. I'm thinking maybe it may not reach 24, 35. A good way to sell put option. But if it reaches 24, 35 or even 25, you could own this great company PAGS at a lower price. That's the way to look at it and go from there. Many times I've made more money when I got assigned. So that way, stock grows higher, I make good money there too. So with that, let's jump in here, look at one more stock here. For that, we'll go to Insight, one of my favorite stock. So as you look through here, we'll go to the chart here. All right, so if you look through INSEE here, we got a 4-year chart. As you can see here, this stock is also coming down. There's a nice support level right here around 63. That's a good one here. And even if you go a little below somewhere here at 58 or so, there's a nice support level. So with that, let's go into the option chain here and look at INSEE. So INSEE, I think let's see the option chain. I think 38 days is good enough. And right now stock is at 64. Let's keep looking at the probability of touch. If you go around 30, you don't make much money. 40, good enough. 60, yeah, this one here, you got to be a little careful. I think you could go around 40 here. You don't make too much money. I think it's 80 cents here, 57.5. You could sell some put option here. It's a great company. If the stock comes down to 57 here, probability is say 40% here. So you could buy the stock, or you could even sell the option. So with that, if you confirm and send this, you're bringing in $80 here. Your buying power effect is 582, and the break-even point is 56, which is maybe around $7-8 below current stock price. This is a one way to play here, and you could take it from there. And last one we look at is Zebra, ZBRA, one of my favorite stock. It's a rocket ship. Off late stock is a little bit in trouble. That's when you sell some put options here or buy the stock. So with that, let's go to Zebra here. Zebra, as you can see, a rocket ship. Nice swing here. And if you were to sell some put option, look at some support level here. I think right now it's at a support level. You could even go a little lower. 387, it's a good level here. So with that, let's look here. Nice on the balance volume. I love it. It's a good uptrend here. Right now, IV percentile is 41, pretty high as you can look through here. IV percentile, IV is kind of shooting up here. So I would sell some put option here in Zebra. Let's go back to Zebra here. So 38, I think 38 days is good enough. And 380, that's what we talked about. That's not too much money. You could go around probability of touch around say 30% or so. 420, good money. I would too much riskier. I would go here 410, that's good enough. 22%. Because the stock is high price, I think it's good to sell some spread here. So you could do let's see, if you could do 410 and 400 spread here. That's less risky. So with that, let's sell spread here. There you go. So you're selling 410 and you're buying back 400. To do that, you're collecting nice $1.50 premium. I love situations like this here. You're not taking too much risk, but at the same time, you're getting in good premium here. See, your buying power effect is 850. You're collecting $150. Your break-even point is 408.50. Which is much below the current stock price. It's a good strategy here. You could confirm and send and go from there. And I also love selling put options on some of my favorite ETFs. Right now, you could look at IBB, which is really Nasdaq Biotech ETF here. As you look through here, this one also has got a little higher IV percentile. For these ETFs, I look at IV percentile around 25 or higher. Right now, I think it's around 24. You could sell some put options on your favorite ETFs like IBB and make some money that way. Also, same methodology here. You could look at identify a clear support area. If I go back here from a support area perspective, look here, there's some support here right here around 142, 144 level. I could come back here and look at my strike price here. As I look through here, look at the probability of touch as we talked about. Around 33 is good enough. You could sell some put option at 140 here, which is around say $14 below stock price. Collect some nice $1.09. These ETFs are a little bit lower risk strategy here. You could collect some nice money here, confirm and send. Buying power effect is 1653. You collect $109 and go from there. I think it's a good strategy here. You could look at other ETFs with a higher IV percentile and do the same thing here. With that, thank you very much. Please subscribe. Have a good day.